We are diving into waiver and estoppel today as part of the national portion of the life insurance exam. These two concepts often show up together in multiple choice questions designed to test your understanding of how a contract can be modified by the conduct of the insurer or its agents. To pass this section, you need to recognize that waiver is the voluntary relinquishment of a known right. This means the insurance company intentionally gives up a privilege it would otherwise have under the contract. On the exam, you might see this described as either express or implied. An express waiver occurs when the insurer clearly states in writing or verbally that they are choosing not to enforce a specific provision. For example, if a policyholder is 3 days late on a premium, and the insurer sends a letter saying they will accept the payment without penalty, this time they have expressly waived their right to cancel the policy for non-payment. An implied waiver is trickier and more common on the exam. This happens through conduct rather than direct statements. If an insurer consistently accepts late payments month after month without saying anything, they may have impliedly waived their right to strictly enforce the payment deadline. The exam will often test your ability to identify when an insurer has unintentionally created a waiver through their habitual behavior and how that affects future enforcement of policy terms. This leads us directly into the doctrine of estoppel. Estoppel is a legal consequence that prevents a party from asserting a right that they previously waived or from contradicting their own previous actions if those actions led another person to rely on them to their detriment. Think of estoppel as a legal stop sign that keeps an insurer from changing their position after they have already influenced the behavior of the insured. If an insurance agent tells a prospective client that a certain medical condition will not affect their coverage, and the client buys the policy based on that assurance, the insurer may be estopped from later denying a claim based on that specific medical condition. The court essentially says that because the insurer representative made a statement and the insured relied on it, it would be unfair to allow the insurer to go back on their word. On the exam, you must distinguish between the act of the waiver and the legal result of estoppel. A common trap is assuming that a waiver requires a written document, when in reality, the insurer actions alone are enough to establish a waiver in the eyes of the law. You should also watch out for questions that ask about the peril evidence rule in relation to estoppel, because while the written contract usually takes precedence, the doctrine of estoppel can sometimes override written terms if the insured can prove they reasonably relied on an agent's oral misrepresentations. A helpful phrase to keep these straight for exam day is that waiver is a voluntary choice, while estoppel is a court-ordered consequence. To help you remember the relationship between the two, think of the mnemonic phrase, waiver is the will and estoppel is the stop. Waiver happens when a party shows the will to give something up, and estoppel is when the law steps in to stop them from changing their mind later. When you see a question describing an agent behavior that leads a client to believe they have coverage, look for estoppel as the legal principle that protects the client. If the question focuses on the insurer's intentional decision to overlook a late payment or a missing form, the correct answer is likely waiver. The concept of detrimental reliance is vital for the estoppel portion of your exam, because for estoppel to apply, the insured must have changed their position for the worse based on the insurer conduct. Understanding the difference between an intentional relinquishment and a legally mandated prevention of a claim denial is the key to mastering these contract law questions.